So thank you guys again. My name is Denisha McDonald with Financial Education Associates, and we are so excited to partner with the Boston Public Library on this series. Today, we are talking about affordable loan products and the various down payment assistance programs that are available in Boston or specific to Boston. I'll let you know which ones are kind of statewide versus which ones are exclusive to Boston, just so you're aware, because they apply. Please feel free to put your questions in the chat. You don't have to wait until the end to ask your questions. Just put them in the chat. If they apply to what I'm talking about in the moment, I will happily stop and integrate that into the presentation. The goal is to make sure that you guys leave a little bit more informed about what's out there. I found a lot of people aren't aware, and because of that, they don't act. And I will say in the past year, a lot of the down payment assistance programs have been changing, and I don't want people to sit on the sidelines and miss out. And when I say changing, I mean they've become more restrictive. They have reduced the amount of money that they're giving. So I want you to be able to take advantage of this opportunity before it's gone, because we don't have control over how long they last or what the next iteration or the next change of it would look like. Okay. So Financial Education Associates is a HUD housing counseling agency. We serve all of Massachusetts, but Greater Boston more specifically. All of our classes are online. We've helped over 20,000 people complete our courses and become homeowners. And we want to make sure that you guys are informed. That's my primary goal, is so that you're not getting bad loans or missing out on down payment assistance. I had a young lady who scheduled her counseling session too late in her process, and she missed out on over $30,000 in down payment assistance because her lender didn't offer it. So why would he tell her that there were better options out there? And she was a week away from closing, so it wasn't enough time for her to switch so that she can take advantage of some of these opportunities. So today we're going to talk about what lenders are looking for. I always want to remind you guys, because there's some work that you have to do before these programs and products are opened up to you. What are affordable first-time home buyer loan products? And then how do we make it work for you? Okay. So, what do lenders look for in a strong buyer? Everyone wants to buy a home. Not everyone is financially qualified to purchase a home, right? So, we want to make sure we have a good understanding of that. You guys can take a photo of this slide. This gives you the major documents. There are more documents that are needed, but the major documents that you need to have in order to apply for a mortgage with any lender. Doesn't matter who, they're all going to require this. Your past 2 to 3 years of W-2s, tax returns, K-1s, or 1099s if you are self-employed. Your past 1 to 2 months of pay stubs, so the full month, they want to see it. Your past 2 months of bank statements. And if you have any investment accounts, they want to see those statements as well. I put Cash App and Venmo in bold letters, and that's because if you have a lot of money going in and out of your account from Cash App, Venmo, or even Zelle, you need to explain every single one of those transactions when it's time to talk to the underwriter. So when you're getting ready to purchase a home, I would say limit the amount of usage of these platforms, or just prepare to explain every single item. So if you're sending money to your kids for a lunch or for shopping or whatever, and you're using any of these platforms, just be prepared to explain that. Literally, they're going to make you print it out and write an explanation next to each one. Or you don't use these platforms. Okay. So start planning ahead if you know you're going to buy a home and you don't want to have to write a lot of explanations in there. I had a young lady who had over 50 of those, and she had to sit and write it all out, every single line. Um, we want to make sure that our income is high enough to support the house that we want to buy plus our other debt. And a lot of times people, they say the trigger to buying a home is my landlord keeps increasing rent. I no longer want to pay them. I want to pay myself. I want to build wealth. So I want to buy a house. If you have a lot of debt, that's going to be very difficult. If your income isn't high enough for what homes are selling for in the area or where you want to buy, we're going to have a problem, right? I met with someone today, and her income was significantly less than what is needed for the areas where she wanted to live, to the tune of she needed to double her income in order to buy where she actually wants to live. And she wasn't very happy with that conversation, but I wanted to make it very clear. I'm like, you're very limited. So this is our calculation. Speak with a lender so they can give you the official numbers. And it once they give you those numbers, you have to make some adjustments. Okay. You're going to have to expand your search area. So deciding where you want to buy, you're going to need to be flexible with that. Or you're going to have to commit to making more money. There's only two ways this is going to work. So we want to make sure that you guys understand that with home buying, there are very specific calculations that lenders use that are pretty much non-negotiables, and you have to fall within that to make things work, okay? And a huge part of that is your debt to income ratio, right? Like I said last week, the more debt you have, the less house you can afford. So if you have student loans, if you have credit card debt, if you have a high auto loan, I'm seeing people's car loans are like $800 a month. If you have that, it's going to be really hard for you to buy if your income isn't high enough to support that plus a mortgage, okay? Your income is lower, but you've been saving for years. If you have great questions, so the question in the chat is if you have lower income, but you've been saving, so you have a pretty decent savings, does that factor in? It does. What that means is you're probably going to have to use the majority of your savings to essentially buy down that sales price or bring down that sales price. And hopefully it brings it down enough to within a number that makes sense for you. Okay, so I'll give the example from earlier. That person had over $50,000 saved, but even with that 50, it was not enough for where they wanted to live. Their preferred areas are just expensive. Homes are selling for $700,000, $800,000. I'm like, there, we can't fill that gap. So we just have to have that conversation based on your income. A general rule of thumb, it's almost like renting, where when the agent tells you your income needs to be 3 times the rent, it's almost like that with home ownership as well, right? They want a third of your income, your monthly income. So when you're looking at your monthly cost, your monthly take home check, they go by gross. We live on our net. So you go off of the monthly gross amount coming in. They don't want more than a third of that to be housing. And that's so that you are living comfortably and owning a home. Yes, they can go higher. Some lenders can go up to 50% of your income going towards housing and all of your debt, but that puts a financial strain on you, right? Because remember, they're basing it off of your gross income, but you live off of your net. So they're not looking at any health insurance premiums. They're not looking at retirement. They're not looking at um, if you have children and they're in after school activities or you have other expenses, they're looking at the big check. You need to budget based off of the smaller check that you actually receive, and those numbers are usually different. So I do want you to pay attention to that and just manage your expectations in terms of what that looks like. Okay, so let's say your gross income is $4,000 a month, and we're going to use the most lenient loan product out there where they can go up to 50% of your income to for a more well for housing. Then that means you have $2,000 a month that you could put towards buying a home, which includes taxes, insurance, condo fees, your principal, and your interest. All of it, the max of that total needs to be $2,000. Well, that's putting you at homes that are under $200,000 right there, okay, or close in that $200,000 range. So it starts to get actually like 250-ish. So that's where, again, when we say looking at realistic numbers, what does that mean? And that is, taking into account interest rates and all of those things. So I just want you guys to pay attention to managing your debt. Try to get your debt as low as possible before you speak to a lender. We'll talk about that in one of our later sessions, but the goal is to have less than 10% of your income, really 5%, going towards all these other debts. So student loans, credit cards, auto loans, personal loans, if you're paying child support or alimony, like all of those things add up and it takes away from you being able to afford a house. Credit scores for a lot of these first-time homebuyer programs, especially in Massachusetts, they've done a great job of trying to standardize that number, is 640. So to qualify for the first-time homebuyer programs, loan products, or down payment assistance, they usually want you to have a minimum of a 640. And if you're buying a multifamily, then it increases to about a 660, sometimes a 700. Okay? So our goal when you do counseling with us is to get you to above a 660, really like a 680, so that you're okay no matter what happens. Can you buy a house with a 580 credit score? Yes, you can. Do I advise that you do that? Absolutely not. The only time that works is if you're getting such a steal of a deal on a house that even with the higher cost that you're going to pay because of your bad credit, the numbers still work out that it's cheaper for you to own than for you to rent. Other than that, you're getting yourself in trouble because it's going to be more expensive because you're a risk, right? You're showing that your credit, your spending habits is not the greatest. That's why you have a 580 credit score. So let's spend the time to improve that because now you set yourself up for some of the best loan products that are available out there. I want you guys to take a photo of this slide because it's just to show you that money is involved when you are buying a house. There is no such thing as no money down. Don't care what anyone says. It's a marketing tool so they can say that because there's no money for the down payment, but there is still money needed to buy a house. Okay. For a lot of the programs in Massachusetts, you need a minimum of 3% of whatever the purchase price is. So I did the math for you. If you're looking at a house that's $400,000, that means you need about $12,000 for the down payment. There is down payment assistance available, and some programs allow you to have some money as gifts. So let's say your parents wanted to gift you some money to purchase your home. Then the rule would be that 1.5% of your down payment needs to be from your own funds, and the rest of it can be a gift or down payment assistance. So now that reduces from $12,000 to you needing $6,000. This is just for your down payment. You still need money for closing costs and other expenses, right? So understand that buying a home is not just about the down payment. You also need to have closing costs and hold on. Oh, it didn't show it here. I don't think it's saved. Sorry, guys. So, you need to have funds for your appraisal. You need to have funds for your home inspection. You may need to have money for your closing costs. A lot of the down payment programs right now are allowing some flexibility with how their assistance works. So you can use some of it for down payment and some of it for closing costs. So if you're short somewhere, hopefully it can fill the gap. But that's where you have a conversation with a housing counselor or with a lender so that they can figure out what you need and what you need to do if you know you don't have a large sum of cash sitting around. Okay, so now we're going to talk about some of the products. Oh, here it is. So understanding you do need to have when you're submitting offers on properties, in order to submit your offer, you need to make a deposit. So you need to have money to make said deposit on the house. They only keep that money or put it in escrow if your offer is accepted, right? So you have when you submit an offer and when you sign purchase and sales, like we talked about last week. So that's two sets of deposits. Usually the total of that is at least 1.5% of the purchase price that you need to have up front. If your agent is really good at negotiating, maybe they can negotiate for it to be less, but that's usually the industry standard unless they can explain that the loan product is going to cover more of that down payment assistance. A home inspection, depending on the company and the size of the home, can be about $500. An appraisal is about the same amount as well. Could be a little bit higher, a little bit lower, depending on the type of home that you're buying. So there's no such thing as no money. You need some money to buy a house. How much you need varies depending on what resources are out there. So I wanted to talk about the ones that are specific to Massachusetts and Boston, and then we'll get into the ones that no matter where you're buying, they're just kind of national products, right? So it's standard across the board for everyone. But these are exclusive to Massachusetts and some are exclusive to Boston. So first we have the Massachusetts Housing Partnership, or MHP. They have the One Mortgage. This is a loan product where it is a low A 30-year fixed rate means your interest rate is not going to change for as long as you own that property. So it's for 30 years, you're going to have the same interest rate. It's not going to adjust. The interest rate is lower than, we'll say, the market. So they call it 30 basis points. What that means to you guys, it's a 0.3% interest rate reduction. So you'll be saving 0.3% in interest on that property um, every year. It's a There are only certain lenders that you can use, so not all lenders offer this product. And that's why we always want buyers to know if they are eligible or not, because depending on the lender you talk to, they may or may not have this. And if they don't have it, most of them are not going to tell you you're eligible for it because they lose you as a client and their goal is to close loans, right? That's how they feed their family. So I want you to be aware so that when you have conversations, you know, okay, I'm eligible for this, so I should be speaking to lenders who also offer this loan product so I can compare. Okay. It is a 3% down if you are buying a condo, single family, or a two family, with 1.5% of that needing to be your own fund. The rest of it can be a gift or down payment assistance. And if you're buying a three family, it increases to 5% down payment or 3% of your own funds. Okay. What I love about this product is that there is no private mortgage insurance. And private mortgage insurance is money that you have to pay the bank every month because you didn't have 20% to put down on the property when you purchased. It doesn't benefit you at all, really. It's money that goes to the bank because they're taking a chance on you because you didn't have the 20%, right? So you don't have to pay that. That's a savings of a couple $100s a month, which is great. And then depending on your income, you may qualify for a mortgage subsidy. And what that is they will give you, how's the best way to explain it? A credit over 7 years on your mortgage. So your mortgage payment will be less than what it should be for the first 7 years, and it will incrementally increase every year leading up to that seventh year. And then after that, you'll be paying the full mortgage yourself. So it's a form of financial assistance so that you can ease into home ownership and not have to pay the full burden of it right up front. So they're giving you a gradual increase or preparation so that you can take over that mortgage payment in full. To be eligible, you must complete your first time homebuyers class. You must be a first time homebuyer, and MHP defines that as you have not owned a home in the last 3 years. So you could have owned a home before, just not in the last 3 years. They look at your household income. So on their site, and I can provide the link for you guys after this, they give you the income qualification by county and then by town or city. So you see what the income requirements are based on the household size. So the number for the income needed for a single person versus a four-person household is different. Okay, so they give you that, and I'll show you that a little bit later on. They provide, you're eligible if you make at or below 100% of the area median income, and we're going to see what that looks like in a little bit specific to Boston. You must owner occupy this property, which means when you buy, you cannot purchase and turn it into a rental. You actually need to live there. The goal is to provide sustainable home ownership for you so that you can stay there and invest in the community. You cannot have um, assets greater than $100,000. So they're looking at your checking and savings account, any of your investment accounts. If you have crypto, they're looking at your crypto account. So making sure that your assets are less than $100,000, which I think is fair, right? Because if you have more than that, you don't really need their money in terms of any assistance. You can afford to get any other loan product out there. Like I said, you need a minimum of a 640 credit score. And then you have to use a participating lender. They have the One Plus program. This is if you are a member, if you live in any of these 29 cities or towns, and you do because you live in Boston, then you would be eligible for down payment assistance up to $50,000. It's in the form of a forgivable loan. So if you live in the house for 5 years, then the whole loan would be forgiven at the end of that fifth year. If not, they forgive 20% of the loan every year until that fifth year, just in case you sell sooner, then you'd have to repay the balance of it. With the One Plus, the benefit is in addition to that 0.3% interest rate reduction, you also get an additional 1% interest rate reduction. So if interest rates are at 6.3, you would actually be at 5 because they're going to reduce that by the 1.3%, which is a huge savings. I had a counseling session with someone. He purchased a home for over $600,000. His mortgage payment's going to be $3,000 a month. It's supposed to be closer to like going closer to $4,000 or $5,000 is what it's supposed to be. So that savings actually was very beneficial to making it affordable to him. For the city of Boston, I want you guys to see the numbers. We're just going to focus right now on the 100% AMI. This is the limit for the one mortgage or the one plus. So if you are a single person, you can earn up to $115,000, 800, and still qualify for their program. If you have children, you have a partner, so let's say it's a four-person household, you can earn up to 165,400 and still qualify for their program. Okay? And this is the income of the entire household. So all working adults, they combine all of your income and it needs to be less than these totals right here. Okay? If you are over, you are no longer eligible for this product. If you are under that, then you are eligible for this product. If you are over, so you no longer qualify at the 100% AMI, the city of Boston said, we still want to help you. So don't worry. What that looks like with the city of Boston is they will help you up to earning 135% of the area median income. And these are the max income limits. So as a single person, you could earn up to 154, 238, and still qualify for down payment assistance, okay? All the way up to a six-person household. You guys can see the math of what that looks like. Feel free to take a photo of this, but I'll provide the links so you can reach out to the city or at least have it so you know what the income guidelines are for the city of Boston. These numbers change every year. They're updated at the federal level and then they send it to all of the cities and towns across the country. So it usually comes out in April. We did not receive it. So we're hoping it comes out in May so they can update these numbers and hopefully they increase. They have been increasing every year because the cost of living has been going up every year. So we will see what happens for 2026. I created this chart to hopefully make it easier for you guys to see how the down payment assistance works for the city of Boston. They have, in addition to that One Plus or the one mortgage like I was talking about, the city of Boston has their own called the One Plus Boston. And that is in partnership with MHP. And if you don't qualify for that, you still have their financial assistance. The numbers look like this. You would get up to 3% of the purchase price plus closing cost, up to $75,000 in down payment assistance. So although you see the 75, don't say I'm getting 75, right? It is up to, there's a max that they're going to give you because it's up to 3% of the purchase price plus closing costs. Depending on the price of the house, that number is going to be small for you guys. To get to that 75,000, you're probably buying a 3-family or a 4-family. So your down payment is going to be larger because the house is going to be at least $1 million. Okay. The city has changed this program over the past year due to reduced funding. So initially at the top of 2025, it was actually 5% in down payment assistance. Then it got reduced to 3% or 2% in down payment assistance. These are all grants. And the latest update this year is that it's up to 2 or 3% in down payment assistance, and they do an asset needs test. And what that means is they're actually going to look and see if you need this money. In the past, as long as you met the income guideline and you qualified and you were under the $100,000 in assets, you got the money. Now they're going to look and see, do you need this or is it just, it would be nice to have? If you don't need the money, so you have a significant amount saved already, then they're not going to give you as much because they want to save that for people who actually need the money in order to be able to purchase. Does that make sense? Let me know if you have any questions there. So they've split it up so that if you're buying a market rate property, you'll get up to 3%. And if you're buying a deed restricted property, you will get up to 2% in down payment assistance. And then if you are a higher income earner, like the slide I showed before, you would get up to 2%, but your cutoff is $35,000 as opposed to $75,000. Okay. In the chat, someone said, how do you get a certificate? So you would complete your first time homebuyers class with any of the HUD approved counseling agencies. We are one of them, but you can go to mymasshome.org and they'll give you the list of all of the organizations across the state. You complete your homebuyers class and then you would receive your certificate once you start the home buying process. So not hard to get your home buying certificate. Okay, so how do you qualify for the City of Boston financial assistance? Well, similar to MHP, you need to be a first-time home buyer. You need to have graduated from a CHAPA approved home buying class, which is also a HUD approved housing counseling agency. You need to obtain your pre-approval, so that letter from the lender saying, yes, I commit to lending you this money, from a participating lender. The City of Boston on their website has a list of lenders or banks that you can use to obtain a pre-approval. You need to be purchasing a condo, single, two family, or three family to leverage their funds. And the property obviously has to be located in Boston. Some people say, well, what if I'm a Boston resident, but I want to buy in Dedham? You're not going to get Boston's money, right? You need to be buying in the city of Boston. You also need to be a Boston resident. In the past, the down payment assistance was for if you lived in Boston, you worked in Boston, or you were displaced from Boston in the last 2 years. That has changed. You need to be a Boston resident. If you work in Boston, it doesn't work for you anymore. Okay. So now you need to be a Boston resident to qualify for their financial assistance. They do require you to put at least 1.5% of your own money into the transaction. So even if you found a no down payment program, you would still need to put down 1.5% of your own money, or 3% if you're buying a three family. Okay. They have the same requirement that you need to have less than $100,000 in assets. For the One Plus Boston, same thing. We talked about that a little bit earlier for you guys. And the eligibility guidelines is the same, where you need to be, again, a Boston resident to qualify. The One Plus program is for 29 different towns across the state of Massachusetts. And you just have to be a resident in one of those towns and you can buy anywhere in Massachusetts. The One Plus Boston is a special partnership with the city of Boston. So they want their residents to stay. So they're going to give you the same benefits, but you have to buy in Boston. Okay. So if you're thinking, I want to buy outside of Boston, then you would just use the One Plus, not the One Plus Boston. Hopefully that makes sense. But we hope that you stay in Boston. The next program is Mass Housing. Sounds similar to Mass Housing Partnership, two different organizations. Mass Housing offers a lot of different loan products. They have the 30-year fixed rate. They have discounted mortgage insurance, and they have something called the MI Plus, which I think is amazing, and it helped a lot of people during COVID. So they will help you pay your mortgage if you lost your job up to 6 months, so that you don't. I think the cap is up to $4,000. So they will pay your principal and interest up to $4,000 for up to 6 months within your first 10 years of owning your property, so that you can focus on getting a new job. The whole goal of that is so that you're not stressed about, oh my gosh, I'm about to lose my house because I lost my job. Nope. Double down on applying, going on interviews, take that stress of the housing cost away. They don't expect you to repay that money. It's considered like a gift, right? To help you get back on your feet. So I think that is an amazing program that they have available if you decide to use them. And it helped a lot of people during COVID, where people were losing their jobs and unable to kind of make ends meet. Okay. They have a higher income limit, so they go up to 135% AMI. So I'm going to go back so you guys can see that number. So these numbers over here. So you can qualify for their program if you earn slightly higher income than the one mortgage. They also have down payment assistance, which is great. And I'll talk about that next. And they don't have an asset test. And what is that, an asset limit? What that means is you could have $1 million in your bank account and they don't care. You can still take advantage of their low down payment, first time home buyer loan products. They're not going to penalize you because you have savings. You can choose to use your savings or not. That's okay with them. But if you need, hold on, I think it's the next slide. Yes. So to qualify for mass housing, you do need to be a first-time home buyer, meaning you haven't owned a home in the past 3 years. You need to complete your first-time home buyers class. If you're going to be a landlord, so buying a 2 or a 3 family, you need to complete your landlord class. You do need to own or occupy the property. And then you need to meet the income guidelines, right? And use a participating lender. Like I said, not all lenders offer all products. So if you go to a lender who only offers FHA or conventional, for example, they won't have this, right? So they're not going to tell you about this because they don't offer it. So that's why I want you guys to be aware today so you can make informed decisions in the future. Great question. Roth IRAs do not count anymore in your asset limit. It used to. They removed it because a lot of people were being disqualified from these programs and they were penalizing them for saving for retirement. So they've removed the retirement accounts from the equation in terms of asset test. It just needs to be those that come from your checking, savings, investment accounts, if you receive any gifts. So I think it launched yesterday, the 27th. Mass Housing has $25,000 in down payment assistance. This is a loan, not a grant. So you will have to pay this back eventually. This is a 0% interest loan. So you borrow $25,000 from them. And when you sell or refinance in the future, whether it's 5 years, 10 years, 30 years from now, 50 years from now, that's when you would repay them back the money. They don't ask for it from you until you sell or refinance in the future. So you borrow 25, you repay 25. Usually, you have to pay 2 or 3% interest on this money with Mass Housing, but they are running an amazing, we'll say, special, so that if you buy a home or you have a home under agreement between now and the end of July, you don't have to pay interest on that money, which is amazing. So if you have been doing a great job of saving, but you're like, I have just enough for the down payment and the closing costs, but I still want to buy furniture, I still want to do these things, I want to have an emergency fund, this is a great option because now you could use their money for your down payment and your closing costs, and you can save your money to do all the other things, right? So being strategic with what's out there. Some other loan types I want you guys to be aware of, and I'm going to touch on them, is FHA, so the Federal Housing Administration loan product. That's at the federal level. That's a low down payment program. I know you guys have all heard of FHA loans. They're good. Are they the best? Not in Massachusetts. Massachusetts has better products like MHP and Mass Housing, so I'd prefer that if you qualify. But this does work for some people, right? It's a low down payment program, so it's 3.5% that's required of you. They have lower credit limits, so if you don't have that 640, you could still buy a house using FHA. I don't like that idea because your interest rate's going to be higher, so you're going to be paying more on a monthly basis for this house. Spend the time and fix your credit so you can get a better interest rate, okay? They offer higher debt to income ratios. So remember I said before, they always look at a percent of your income. They allow you to go up to 50% of your income in terms of total debt. Good or bad, right? For some people, if you are strategic, it can be a good thing. If you are struggling to maintain, and you're living literally check to check, that is not a good idea for you because you are stretching yourself thin, okay? The downside is you have to pay mortgage insurance, right? And it does not go away with FHA. So you're paying that money in the beginning, there's an upfront cost, and then you're paying it monthly for the life of the loan because you didn't have 20%. So I don't like this because there are better products out there, but for some people, this may be their best option given their situation and their timeline, okay? The second option would be a conventional loan product. This one, usually they have a minimum 620 credit score requirement, which feels a lot better. They have low down payment options, so you can buy with as little as 3% down. Usually it's between 5 and 20% for the conventional. In order to have the mortgage insurance removed, you would, or not have it at all, you need to have 20% for your down payment in order for that not to show up. And then their debt to income ratio is about 45. So higher than MHP, lower than FHA. So again, it depends on where your financial situation falls. Will let you know which loan product makes the most sense for you. Some other no down payment products that are out there. Again, there's still a cost to buying, right? You don't need to pay the down payment, but you still need to have money to buy. Would be a veteran's loan and a physician's loan. Okay. The the VA loan is a no down payment program. You don't have private mortgage insurance. They have flexible credit requirements, so they give you a little bit more leeway there if your credit isn't stellar. But you do have a mandatory funding fee with them, which ranges from 0.5 to 3.5%. So that can add up quickly. So no, I didn't have to pay for the down payment, but I still owe you money, right? And then they have strict property requirements. And what that means is you can't buy just any old house, right? The house needs to be in a certain condition, and they're going to have an inspection done to make sure it meets their code requirements for you to purchase. Else they're going to force the seller to do those repairs, which could kill your deal or not. So these are things that you want to pay attention to upfront. They do allow you to use, if you don't have that, let's say it goes up to 3.3% for the funding fee, to leverage seller credits to make that possible. The other one is a physician loan. So if you are a medical doctor, a doctor of osteopathic medicine, a dentist, pharmacist, chiropractor, nurse practitioner, veterinarian, a resident or a fellow, a registered nurse, or a clinical nurse specialist, you can qualify for the physician's loan. It's very specific, so not everyone who's in the medical field can leverage it, but some people can. They used to have physical therapy on there. They have since removed them from that list. So this is a no or a low down payment program. They don't have any private mortgage insurance, and they have very flexible debt to income ratio requirements. And the reason why is because we know that becoming a doctor or a physician is really expensive. That's like hundreds of thousands of dollars of student loans, and it's going to take a while to pay it off. But they are going to be high income earners, right? So this loan is designed because they know you may not be making a lot now, but you will be making significantly more in the future. So we feel confident that we don't have to hold that against you because of the profession that you're in. Okay. They have higher interest rates, so I will say that, and they have a greater risk of being underwater. So if the market takes a turn or a dip, they could be impacted because they're not putting any money down. The home is already at its max value. There's no wiggle room in there if anything happens. Okay. But that is a loan product that is available if you fit any of these categories of professions. You also have the USDA loan. This is also a no down program. Ironically, this is usually for rural areas, but it's weird. You have to go to the website to see if your property qualifies or not. And there are some, literally, it's the house, right? There are some houses in Hyde Park and I think Roslindale that could qualify for this. Weird. um, Even though you're in the city. It's just how it was classified and how they maintain the platform. So it is not impossible to use this. It's just it's very specific to the property and the location. Okay. For this one, you need to have a minimum of a 640 credit score. They do have fixed interest rate, which is great. You are still responsible for the closing costs, but you can have the seller pay that for you as long as the home has enough equity in it to cover that within your financing. They do have fees that you have to pay, and you just have to look to see if the house is in an eligible area. It's very specific, so you'd have to look property by property. And finally, I want to talk about rehab loans. What happens if you drive through a neighborhood and you love potential because you love projects and making a home your own, and you find the ugliest house on the block? And you're like, well, I can make it what I want, but I don't have the money to do the renovations. This is a great loan product for you because you can finance the purchase of the property plus the renovations into one product. right? So it's not where you need to take out two separate loans. They're going to buy the house for you. So you're going to have that as your purchase price plus the cost of your renovations. And that's going to be one mortgage payment that you have to pay every month, which is great. And I've seen people do pretty much full gut rehabs and redo a house with this program, right? So it's a great option if you find a house that needs a lot of work and you don't have the funds to do the work yourself. It should not hinder you because there is an option. This is an FHA product. So they do go to lower credit limits. If you have a lower credit score, I prefer you fix your credit before you start this process because the lower your credit, they may require a higher down payment from you and your interest rate's going to be higher. It's naturally going to be higher because of the credit score, but also because it's a renovation loan, they actually charge you a few extra points on that so that your interest rate's going to be higher just because you're using a 2 or 3K loan. So there's a lot of math that goes into it where you need to talk to your lender along the entire process of when you're looking at homes to make sure that it's going to work in the end. So we talked about loan products and some down payment assistance. Here's a couple other down payment assistance programs. We have Stash. If you are a first generation, first time home buyer, meaning neither of your parents have owned a home in the US, then you would be eligible for this. You need to earn at or below 100% of the area median income. The minimum that they require is $60,000 if you're buying in Boston, or $45,000 if you're buying anywhere in the state of Massachusetts. So this is open to buying anywhere or living anywhere. Okay. It is first come, first serve, and it is $10,000 grant if you're buying in Boston, a $20,000 grant if you're buying outside of Boston. You need to complete your first time homebuyers class before you can apply for this. You cannot have assets more than $100,000. You need a minimum of a 640 credit score and you need to have at least $2,000 saved. Okay. So as you guys can see from today's presentation, a lot of these programs have the exact same requirement. And that is because they were talking to each other and having meetings to say, how can we standardize this process to make it easier for first-time homebuyers? They just have to think of one set of numbers as opposed to all of our different programs having different requirements. So 640 credit score, making sure you have less than $100,000 in assets. Take your first-time homebuyers class before you reach out to anyone because that's going to be their requirement. And then figuring out if your income qualifies or not, depending on the program. Okay. Next is the Federal Home Loan Bank of Boston. They have down payment assistance that goes, I think, from $20,000 all the way up to $40,000, depending on, they have different categories of how you can qualify for it. And their program is interesting because it drops, as we say, or it launches every April, and it's usually all gone by summer. So I'll say like July, August is when it kind of is depleted. The money comes out on the 1st and the 15th of every month, and lenders from the entire state are submitting to hopefully get this money for their client. So I state it as an option, but I tell people don't count on it because it is so competitive and it's out of your lender's control. It's just a blessing if you can get these funds. And that's because everyone's submitting paperwork. And usually it's like it opens at 9 a.m. on the 1st and the 15th. And by like 9:01, it's all gone, right? So in 1 minute, the money is gone for that round. It's very fast, and you just kind of pray that you win, but we don't have control over that. I encourage you when you are talking to lenders, interview them. Don't just go with the lender that your friend told you they bought a house with. Interview lenders, have conversation. Not everyone needs to pull your credit to talk to you, right? You can have a conversation and say, based off of this, give me some ideas. What do I qualify for? What would it look like? I understand you need to run my financial for specific numbers, but I'm just interviewing and getting an idea. So they don't need to pull your credit to do that. You're trying to see what loan products they offer, what down payment assistance they have, if they have any other benefits. Some of them offer you a reduced interest rate. So some banks will give you like a 1/4%, so 0.25% off of your mortgage if you open a checking or savings account with them. Others will give you closing cost credit. Some may waive your a fee for you. So again, ask them. You have not because you ask not. So start asking questions. Okay. Your immediate next step. So I gave you guys the big picture of all the programs and products that are out there, specific to you guys are living or residents of Boston. So try to keep it specific to Boston. And there are more that exist. So check and see if you are part of a union, absolutely go to HR and find out what do you have to offer first-time homebuyers? The Boston Teachers Union, for example, they cover the cost of your attorney. So you don't have to pay for an attorney because you've paid for it in your monthly dues, right? One of the librarian associations for Boston, they have $10,000 in down payment assistance for their members, right? So ask. You never know what's out there unless you ask. They do a horrible job of marketing it. They don't send out newsletters to tell you it's out there, but it is out there. So find out what's available and what you can take advantage of. I think Allstate was the insurance company that had a down payment assistance program that people could apply to, and it was up to $10,000 that they were giving out. Very competitive because it's nationwide, but some people were able to get it. So don't be afraid to just Google down payment assistance and see what's out there. Ask your employer if they have anything, if they have any down payment assistance, or maybe they have a match savings program that you can enroll in. There's money, and I want you guys to not be afraid to do some research or to ask. And if you have questions, you can schedule a counseling session with us, and we're happy to help you sit down and figure out what is out there specific to what you may be eligible for. In July, we'll be hosting our down payment assistance marathon, is what I call it. So, what I talked about today for you guys, I bring all of the professionals in and have them literally talk about what they have to offer. So, we'll have a representative from Mass Housing, we'll have one from the One Mortgage, from the city of Boston, from Stash, coming in and talking about all of the different programs. And we're researching to see what else is out there so that we can combine. I love stacking programs. I had a young lady before all of these changes, before all the budget cuts, we were able to stack, let me see, five? Yes, five different programs for her, and she got over $200,000 in down payment assistance combined because they allowed us to stack and we just kept stacking all of it because there weren't restrictions. Now, no longer possible because they have asset needs tests. So if you have a certain amount, they're not going to let you go over that number. Okay, so we love helping you find and be creative in terms of putting things together so you're successful, but you have to be ready to go, right? That only works because she became mortgage ready so that we can piece things together after the fact, right? We talked to the lender, we learned what we can do, what her buying power was, but you need to be ready. They can't reserve funds for you a year from now, right? So I want you guys, if nothing else, start focusing on your finances today so that hopefully you'll be ready by summer or by the end of this year so you can take advantage of some of these programs. I want you guys to complete your home buyers course, schedule a counseling session once you graduate, and that's if you use Financial Education Associates or any counseling agency, right? Like I said, there are several of them available across the state. Take the class, schedule a counseling session just so you know where you are financially based on how lenders look at things, so that you don't miss out on opportunities. And then follow us on Instagram. We try to post resources on there for you guys. We post all of our classes and the sessions that we offer. If you need to take a landlord class because you want to buy a multifamily, we also offer that. Like I said, we have topical sessions. So last night, we had our deed restricted property presentation. Next month, we're going to be talking about the physician loan product, and if you're a medical professional, what options are available to you. In June, we're going to be talking about condo ownership and buying a condo, if it's good or bad for you. And then July, we're going to be talking about down payment assistance. So we try to keep these topics where it's very specific. So just what you need to know is what you're coming to listen to and not all of it. Okay. So, and we have, again, I always talk about our money accountability, our Money Mondays. I think it's important for you to be tracking what you're doing with your money. Every fourth Monday at night, so 6:30 to 8:30, we do budgeting. So you work on your finances and look at what you did from the month before. And then our lunch and learns, we cover different topics, whether it's credit, whether it's how to save, where it's literally just a list of action items of things for you to do. If a lot of people come, it's a presentation. If it's just you, we solve your problem right there on the call. Okay, so it's a win-win. So I'm going to stop yapping. Hopefully you guys found today helpful, and I'm going to go back and read the questions in the chat and see if I can answer them. If you have more questions, feel free to put them in the chat as well. Is retirement savings? Yes. So your retirement savings, so if you have a 401k, 403b, any of your government or any other retirement accounts, those do not count within your asset test. It's really boiled down to any gifts, your checking account, your savings account, your investment accounts. Okay, so if you have crypto, if you have stocks and bonds, they look at all of those things. Okay. Um, the classes are at the, nope, all of our classes are online. So everything that we do is online, because we find it's just been, we've had more success with virtual classes than in-person classes and people attending. So they're all online. You can find them on, let me stop sharing my screen so that I can put the links in the chat. All of our classes are online unless we partner with an organization that wants it to be in person. I'm going to put our website in the chat. And there you can find all of our classes that we offer. And then once you complete the class is when we would schedule the counseling session. Unfortunately, ultrasound tech, I do not believe is included, but at that presentation, the lender is going to be talking about if you don't qualify specifically for the physician loan, what are the other loan products that you would qualify for, right? Because there's more that's not branding, right? So there's still loan products that are out there that could work for you, or different things that we can put together to make it still feel like the benefits of the physician loan, but it not be that specifically. Okay. Um, I believe the recording of today's workshop will be shared with you guys via email, or they're going to upload it to YouTube and share that link with you guys, I believe. All of our classes are in the afternoons. They're usually 6:30 p.m. Our home buyer classes are usually Wednesday nights, Thursday nights, or Saturday. Our topical sessions are usually in the evenings, 6:30, Mondays or Tuesday nights, and then our budgeting session is the fourth Monday at 6:30 p.m. So almost all of our programming is in the afternoon after you finish work. We implemented the lunch and learn similar to what we're doing today, just for those people who cannot attend the afternoons, but we just make it very condensed so that while you're eating lunch, you could be learning. Try to make it simple for you. Okay. So let me know if you guys have any questions. We have about 5 more minutes. I hope you guys found it helpful. Feedback is appreciated because it helps me know if I talk too much, if I give you information that you didn't want to hear. We want to make sure that you guys are learning and able to implement something. Today was more letting you know what resources are out there. There's a lot. So I don't want you to miss out on them. The loan products, as long as you meet the income limits, for the most part, you guys will be eligible for that. The down payment assistance, that's the one where a little bit more strategy is involved because we're going to have to figure out, they're always ever changing. So the rules that are today, they may not be the same next month, right? The city of Boston has sent out, it feels like every 2 or 3 months we've gotten an update from them in terms of their program. So again, you have a rough idea of what's out there right now, but once you're ready to press go and start, we'll have to do a whole revamp and look and see what's available at that time that you can take advantage of. Okay. Um, let's see. Any programs on buying a second home? Yes. So depending on your situation, the type of home that you have now, there are loan products that can help you buy. You can buy a second home at any point, right? But depending on how you have it structured will be the difference between it being 20% down, 10% down, or 5% down to buy that next home. Okay, so there are programs available for you to buy another house, but it depends on your situation if you're going to need 5, 10, or 20% to make that happen. Uh, the certificate class, yes. Our home buying 101 class is $30. I think for most organizations in that are based in Boston, it's about $30. Outside of Boston, it increases. Some of them might be 75, some might be 100 for those classes. Okay, so I think I answered. I'm going back. Awesome sauce. So thank you guys. Hope you found it helpful today. I look forward to you guys joining us next week as we continue the series. You guys will get emailed the same resource as last week because I put everything for each week on it. So it's one document but has everything. You're going to get the links to our classes. You're going to have the questions, the interview questions for the lenders and the agents. I'm trying to think of what else I put on there. The documents that you need for the lender to go get a pre-approval. So you know from day one what you need. I encourage you, and I say it at every meeting, get organized, right? You have the list of the documents the lenders need. Start getting them now. If you just did your taxes, we know they're going to need your 2025 tax return. Put that in a folder because they're going to need it, right? They're going to need your 2024 tax returns. Go find that and put it in a folder so that when you start talking to lenders, they're all going to need these documents. When you start applying for these different down payment assistance programs, they're going to need these documents. So multiple organizations need the exact same forms. Find them, save them, label them so that it's organized and it's easy to find. So I suggest you label it, I'll use myself, McDonald 2025 tax return. McDonald, March 2026 bank statement or pay stub. So label it with your last name and what the document is so it's easy for you to find and it's easy for whoever you're sending it to know what that document is.